There we go. Good morning, guys. Ken at Tortoise Capital. This is the Saturday morning podcast, the Q&A session for the hybrid trading workshop. Shout out to Ting Zhou. I know it's wicked late at your side of the world there. Appreciate you being able to join. So I sent you a link, Ting, that on Patreon, if you look at the search bar on the top, you see the keywords. If you click on index, it'll show you the last 3 months of the consolidated nightly videos. That also includes the Saturday morning Q&A sessions as well in one consolidated index. Those are also on Talent LMS, the learning management system, in course number 104, which is the hybrid trading course, that has a working list of all the daily podcasts and then a summary of links to the 2 weekend workshop recordings. It's about 15 hours of stuff, and then each of the Q&A sessions that we've been doing Saturday morning. So it's all in one consolidated pile for you there. So I sent you the link to that. So I'm doing a fundraiser for our soccer club. And Rick Wise was kind enough to donate 20 of these tortoise and chimpanzee plaques. They're about 6 inches long. You can see the size of the compared to a pen. Hey, this is that nice Frixion gel pen with erasable ink. So I've been starting to use these now for the 5x8 cards, and I like the multiple colors. And it just, my handwriting on a card is a lot neater than on the digital pad. So the nicer flashcards I've been doing have been featuring the Frixion erasable gel pen, and then I just I keep a little executive size 3-ring binder with pre-hole punched cards. So I just carry that stuff around, and when I feel the need for a storyboard, 5x8 seems to be the right size, and it's workable. And then with the Frixion pen, being able to do these different colors seems to work out pretty nicely, and it has a real focusing power for me. So anyway, what I'm going to do for the fundraiser, I think, is these are nice. These are just beautifully made. I think he's got them out of pine, and he's using his laser etcher. And what he's got in here, kind of hard to see, but he's got that etched with the laser, and then he pours a clear epoxy into that, and then sands that down nice and smooth. And it's just beautiful to look at. So I'm asking for a $100 donation to the soccer team for that, which will include the shipping. So if you're interested in that, the first set of 20 are going to go out at $100. After that, the price is going to go up. And I think what we'll do is I'll probably put some kind of 2-for-1 coupon on that as well. But if you're interested, send me an email, and I'll if I have any left in stock when you email, I'll send you the I'm happy to mail those out to you. It's just beautiful to look at, and it captures for me the the endpoints of my psychology. On my best day, I'm that apex predator, the owl, with a little bit of wisdom and a respect for the night, which is my prep time, and then competing with the that 600-pound gorilla chimpanzee, which is the impulse to act. And for me, that sort of represents the two endpoints of my psychology. And I'm that person trying to, and that for me, that block of wood is my head. And you'll notice there's like a little smiley face in there. He's done such a nice job on that. That's my wooden blockhead trying to contain elements of my owl nature and my monkey nature. And for me, this just kind of represents the entire spectrum of trading. So it's on a nice, looks like about 1/2 inch, 3/4 of an inch piece of beautifully sanded wood. I just think he does such amazing work. So if you're interested, just send me an email. We'll get that done. And the soccer team will thank you for it. We had really good practices this week. A couple of my college alumni players came back for the summer and checked in with us and brought their cleats and helped scrimmage with the girls, and then had a little coffee talk with them. We went down to the local IHOP, the International House of Pancakes, respecting our social distance, and we just had a little alumni team coffee talk and breakfast. And they were talking about college and what it takes to be successful and passing on the things that they know. And it was just a real treat to see, you know, the range of girls, big sisters, little sisters, working together. And so this is helping support that leadership process that we've got in place. And I wanted to share that with you. So this is from Dave. Now this is the only question that I had this morning, so this one will probably be fairly easy. I'll make it easier than it is. It'll sound real easy, Dave. So, but I think this is really the essence of where to put your attention and effort. And I wish I'd have had this image in my head before this very second, because otherwise, if I did, I would have a really nice flashcard for you already. So Dave's question was information on entry and managing winning trades has been extensive and informative, especially the flashcards with the walkthroughs. Could I do a short discussion on managing losing trades? This one is even easier because here's the flashcard. If it hits the working exit, it was a losing trade. I get out, and that's the end of management. So there's really, it hit the boundary, and out we go. So that's about how much time I spend thinking about what to do with trades that are losing. I'm monitoring my current working exit, and that's really it. So if this was my, I'm stalking, the very first line that I draw is that initial stop, the I stop. Right, so there was some price bar that got us to this position, and it ends up with that price bar. So on a daily management, daily bars, and I use that 0.05 buffer. Then my entry there's my initial entry. And all this is predicated on some kind of eye target. This whole region in here is the yellow zone. As long as price is within that region that next day, then there is no directionality to this thing yet. It has to get through that mechanical entry or that mechanical risk to have any directional indication. So this is the red zone down here, and that's the green zone up here. So on daily chart, 1R equals range risk. Okay, so if that's my R, then this had to be qualified with 2 scoops to 2R. So for me, on those daily swings, when I'm using range risk, it is normal for me to frame this as the 10-day high, because in the look back period, -1 to -10, and we're over here working on day 0. And we've set up some kind of trade that looks like this. And then there was some 10-day high that was made on some day. And maybe this looks like that, and maybe this is like that. Well, that's the in terms of the NDX 10. Remember, we start with yesterday and then going back 10 days. All right. And so on the day of execution, well, that's a horrible looking bar. Sorry. It was a Chinese symbol for something. I don't know what it is. I think man. So now think about the mechanical patterns that I teach. There's like 5 days down. Well, that just means that, there were 5 lower closes in a row, and that sets up a 5DD. A triple screen features where there was a strong trend up, a measured pullback, and then 1 day of improvement, and then we're testing the 10-day high, and then probably the swing low would work. In that case, you might pick the swing low might have been yesterday's low, or this thing might have been down here, and you decide that you want to use that. But typically, even when I'm trading the triple screen, even though this may have been a higher close, I'm always initially framing it on the last day in that swing sequence. Because on the triple screen, what I'm really getting is the second day's worth of momentum. There was some price improvement here, and then I'm buying the second day momentum. Same thing with the 551W. It was higher than it was 5 weeks ago, lower than it was 5 days ago, and then today's price was a white candle, or the close was higher than the open. And then on Williams %R, or the NDX, there's still 2 scoops of gain versus the 1 scoop of risk. The channeling system simply waits for things to be overbought on a 10-day basis. So using the NDX, that's 80, 20, and 0. And there's the 50-yard line. So the channeling system is simply waiting for things to have hit this overbought condition while price is above the 200-day moving average. That's a buy on dip. And then the overreaction says, oh, there was some kind of sharp price action. The overreaction says this thing is generally trending up, and then there's some sharp price reaction against the run of play. And that gap was greater than 1 ATR from the high, and that creates the window of opportunity that says, oh, this adverse move was probably an overreaction to news. And now, if it just breaks out of that, it's going to go back to the fair value and then beyond. And that really represents the overreaction. And then the washout pattern says that on an annual basis and on a 10-day basis, using the NDX 260 and the NDX 10, yesterday was oversold. And then on a 10-day basis, it was oversold. So it was horrible on an annual basis, long-term, horrible on a short-term basis. And there was that big sell-off was followed by a setup day in which there was a higher low. It took out yesterday's high, and it was a white candle. So all those three things make the washout pattern worth a shot on the swing trade. So in every case, on the daily charts, what we have is some pullback against some recent good feeling, right? And this is probably a function of fear, and then greed. We'll look at this as this was a quality asset. I want to buy it on a dip. And then that brings in all the buying pressure. And then the first time that we can definitively say that there was an improvement in the trend or a reversal in the trend is if it takes out yesterday's high. Because yesterday, in the tug of war between bulls and bears, back and forth between bulls and bears, it set the high and the low of the day as the boundary. That was the playing field. So until price leaves that playing field, it's really not, it has not made a directional move yet. The first price action that tells us that new buying pressure has come in to push this higher is if it can push it to a price that was higher than yesterday's price. And so I put that little 0.5 buffer in there to make it clear that previous high. Well, the price that would tell me that the bears have won, though, is not until definitively it comes down and breaks this. So that range risk now represents the price uncertainty, the uncertainty of price, which is the hypothesis. The hypothesis is that if this price breaks out and gives a buy signal, then I should be able to make money on this trade, which means that as price goes up based on the power of that impulse that impulse to buy, is pushing it up, that it's going to go up a distance that allows me the time to take my initial risk and move it to no lose plus dinner for two. Now on day trading, I'm going to talk through the Wu Wei exit here in a minute, or the PSAR exit, which I think are the two lowest cognitive effort ideas ever to manage that trade, other than trailing stop with your initial risk. I mean, that's set the initial risk and then trail it. That's the frog box style, or the hybrid frog box if you're using a fraction of the. So that's what it is like intraday. On these swing trades, my standard practice is that range risk, and then I get to make a decision when to move that stop to no lose plus dinner for two. In other words, move it just a fraction above yesterday's high. Now, that's one way to establish that lower boundary. Another way is to use a multiple of ATR. I might pick one ATR, I might pick two ATRs, I might pick three ATRs. On swing trading, I think the reasonable boundaries are between one ATR and three ATRs. Less than one ATR, and you are then a noise move could take you out. So in this case that I've just shown here, if we got the entry, then it moved a full daily range against it. It moved yesterday's range against us and took out. That would no longer be uncertainty. That would be 100% definition that the bears just won. So there's no uncertainty there. So the space in between, that yellow zone, is the range of uncertainty. If you're using a trailing stop, then as that price moves up the stack, you're hanging, it's dragging that initial risk box behind, and then your risk management would look like that. It's a parallel line that as price goes up, it's just pulling your risk out. What you may elect to do in that case is you might say, at some point, I'm just going to accelerate that and move to no lose plus dinner for two and keep that in place until this trailing stop catches up, and then just resume with the trailing stop. So this little piece in here is accelerating. That feels like a sniper move when we're doing the intraday trade. But on a daily chart, you can do the same thing. And you could do that on 10-minute charts, 30-minute charts, 1-hour charts, 2-hour charts for your swing trading. Whatever time period that you've chosen for managing that initial position, until such time as you get it above your entry. Now you've locked in, some amount of gain, and now it's a science project to see how much more you can get out of this thing. That's an important psychological moment for me in any time frame that I'm trading. So the only management on this issue is, hey, what if this goes up and then comes down below your entry, and now this thing is coming down? So that's why you have to have your strategy locked in right here. I don't want to spend any effort thinking about what to do after I've made the entry. After I've made the entry, I'm not thinking about it anymore. What I'm doing, because I've already done all my thinking, I'm watching the exit, and then if it gets me out on this line before it got to no lose plus dinner for two, then it was a losing trade. That's how much time and effort I spend managing that trade. Did it hit my stop? No. Then it didn't lose. Oh, if I've gotten to no lose plus dinner for 2, and it now hits this line, then it was a fractional win. If the working stop is moving up and then price rolls over and hits that, then it's a winning trade. So I'm not spending any time, 0 time, no cognitive load on thinking about where my stop should be after the moment of entry. I do all of that over here. All of the thinking happens over here inside the trade frame and choosing which strategy I want to use. So that's what it looks like on swing trading. And I've used range risk, that range risk, as my 1R. On this collection of swing trades over the last 20 years, the win rate is something like anywhere from 0.5 to 0.6 win rate. And the average win is like 0.6 R, and the average loss is 0.3. So that's an unfairly weighted coin that pays 2 to 1. So my job is never to take more than a 1R loss. But my actual losses in here tend to be like this, about, at the 1/3. And that means that even if I'm just using the trailing stop, this thing went, 1 point, it moved 1R in my favor. And somewhere in here, I jumped it to no lose plus dinner for 2. So I'm cutting out a lot of these losses greater than 1R. Now, on the intraday trade, because the intraday trades happen faster, I see your question, Ann. I'll get to that next. So there's the start of the day, and then something happened. I'm gonna map this as a big fat SSC. So there's our RL10. Oh, sorry, my hand flinched. So there's the baby dragon, and he crossed it. Now we have a warning that something, that the winter is about ready to cross, or is about ready to become spring. So this was our baby dragon. This was the RL10. This was our harsh winter. And this should look something, that's the pattern that we're looking for. And then if you were suffering through last week's discussion that PSAR -1 is something like a protective trailing stop, or trailing entry, I should say. All right, and so that low point in the RL10 is where this PSAR dot ends up becoming. So if you end up using the this PSAR as your protective entry, so that some sharp move north, what'll often happen is that price is coming down here, and then suddenly there's some rapid move, and it front runs that RL10 crossing, but the RL10 doesn't cross until this thing is like 2 or 3, sometimes bars ahead. This little stop here, the hypothesis is that a move that gives such a violent reaction against the harsh winter might be exactly the kind of thing that's the precursor for a lot of buying pressure. Something large came in and moved it that far, that fast. So this one gives you a chance to get in early. After 1 or 2 bars, then the PSAR dot will flow from here and then actually make the flip. But you're already in the trade. Instead of entering up here when the PSAR flipped, you can be entering here. And then we still, as long as you're drawing your box to the bottom of the RL10, it'll be where the PSAR flipped at. And that becomes 1R. Oops. Yeah. That's 1 execution R. And 1 times execution R equals 0.2 position sizing R. Now, on the intraday trades, my average win is 0.6 position sizing R, meaning that if this is the size of my risk box, I'm getting 1, 2, 3 on average, which means sometimes you've seen me get 5, 10, 15 execution R. When you factor all those things in, getting 3 boxes up, and my average loss is average loss. I'm going to set that equal to 0.3 R. Now, Ann asked the question, if my average loss is 0.3, why isn't it 0.2? Because I'm telling you that I'm giving you a safety buffer of an extra 0.1. Because you could imagine how this thing sells off immediately and it hits your stop, and then you get some kind of spillage in here. So I'm giving an extra 0.1, which is 10% of position sizing R, right? For slippage. So even though my average loss is like 0.2, I rounded up to 0.3 to account for slippage and to keep the numbers on the right side of risk. So this little piece of psychological math that 1 XR equals 2, it makes all the difference in your mindset. And the reason this is so important, this gets back to Dave's question. This entire region in here is a transition state. You had what was clearly some harsh winter entered in there, and then clearly on winning trades, that thing goes up. And so this transition state here in the middle is where all the angst and anxiety comes from. Well, I've just shown you a way to use that mechanical frame and say, well, there's my entry, and then there's the price, which if it violates, that's going to be a collapsing dragon. So I actually love that losing trade. I'm rooting for it to lose, Dave and team. I hope it fails, because this is my favorite pattern, the collapsing dragon. And the size of this leg down is the size of the next leg down. Leg 2 generally is the size of leg 1. And listen to last weekend's podcast for a greater discussion on how all that stuff works. So the point I want to make on this, to get to Dave's question, was that I am spending zero time thinking about it in there. All my thinking is happening over here. And I'm either going to use a Wu Wei exit or a PSAR trail or some kind of hybrid frog box trail. Because to be fair, the SSC is only one of the patterns that I use intraday. And I love that Wu Wei exit. It's easy. And the PSAR exit is even easier, because the dots tell you how to manage the trade. And if it hasn't gotten above your entry yet, then if it hits the PSAR stop, you're out. That's how I manage the losing trade. I just do the PSAR. Or if I'm using the Wu Wei exit, all I'm doing is keeping that initial risk where it was until the PSAR dots, till I get about, I'm going to say three PSAR dots above my entry. When I see 1, 2, 3, then I take this static constant exit and then move it to the PSAR and then lock it in until the Bollinger Band mean comes along, and then I pick up the Bollinger Band mean. So it looks just like that. Okay, so the PSAR was coming down, and now the PSAR is rolling up. What that means is that at some price level, I got in. The Wu Wei exit is looking for, call it that fourth dot. So after the third dot, when this bar closes and the third dot is formed, on that fourth dot, the Wu Wei exit takes this and goes straight to here and leaves that in place. By that time, the Bollinger Band mean probably looked like this. This is normal behavior. and that's that simple moving average 30, of the last 30 bars. And that's the manager exit. Now, if this thing was working and the PSAR dots are up there and you're watching, you're watching price make these kinds of moves and it feels like it's rolling over, or you saw the two dragon horns way up there and it was outside of Z2, and you said, oh, that's enough for me. You might then elect to go from the manager's exit. You might say, hey, let me take the PSAR as my sniper. And so you might pick a sniper exit anywhere in this region that sniper exit on one half of the position, and then the manager's exit on one half of the position, and then you end up getting the average exit between the manager and the sniper at zero cognitive effort on the manager's point. No thinking. Just do it. So the only time in this little model that it's a losing trade is in this time frame here. So my choices are, do I want to just use a PSAR trail or the Wu Wei exit? So if this price moves up and then starts rolling over, if I've already decided which one of these things I'm going to use, if I'm going to use the PSAR, then if it comes down and hits that, I'm out. If I'm using the Wu Wei, it has to come down here and I'm out. That's all. Now, I will give you one other option on this, that after you pick one of these things and practice it 50 times. In fact, take 50 trades and then put the PSAR exit on it and see how it does. And then take the Wu Wei exit and see how it does. And then trade those forward and see how you feel, and then take a look at the results and your emotional content. And then see which one of these in general feels better, which one is easier to execute, and what's the real difference on your traded instruments, on your time frame. Because this is, whether this is 1 minute or 5 minutes or 10 minutes or 1 day, that still all works. After you've done 50 and you've done this analysis, then and only then are you ready to say, I wonder what I could do if this thing went up 1, 2, 3 and hit the Bollinger Band mean and then started to fail, and the PSAR hasn't come up yet, and this hasn't moved yet, but I just decide, no matter which one of those I pick, screw that, I'm just going to sniper it and not lose any money on that trade. That takes some cognitive effort, and that means you have to be watching that trade. And if you're watching that trade, your span of control equals 1. If you are working and watching that thing that close inside here to see what's going on, you're not watching anything else. Now, that's fine, but just know that your span of control is 1. And if you commit to trying to do this sniper exit in here, then you're going to miss other opportunities that in retrospect, your monkey brain will say, oh man, I coulda, shoulda, woulda. Okay. Until you've done the discipline of 50 trades and made a deliberate decision on which one of these is your standard work, and if you just jump right to this decision, you'll drive yourself crazy and you'll never get beyond a span of control of 1, and you'll always be wondering, well, when should I get out and what should I do? And what you're really asking me is, what should I use as my sniper exit? I'm not going to answer that for you until you've done 50 trades, compared the PSAR to the Wu Wei exit, made a rational decision based on your experience. Then and only then are you ready to start thinking about the sniper. You will have built up enough mental thickness that you just realize, oh yeah, that's right. Here's what ends up happening. Here's where you're going to get to when you do that. Where you're going to end up is you're going to realize that whichever choice that you make, the PSAR, I'm using a program called Time Bolt to cut out these blank periods on the recordings. So let's say that you've done, this is your trade ticket here for the, I'm using the PSAR on this one, and I'm using Wu Wei on that one. And then after you've graduated to brown belt, you can start using the sniper right away. So wherever you are in your personal trading development, you do all of this for this proposed trade. I've got some trade over here and it's doing whatever, and I've set up my little trade frame. This is your normal practice. That is standard work. And this is going to be 80% of the time. Once you kind of graduate to incorporating that sniper activity, then your normal standard work is going to be 80% of the time. Until you've done 50 of those trades and compared PSAR to Wu Wei, I'm going to tell you, you're not a brown belt yet. So it's going to be 100% of the time. You pick which one you're going to use, and then you follow the rules. After you're a brown belt, what's it take to be a brown belt? Brown belts can do this. A brown belt will study this. He's going to try it on, and then when he's ready, he says, my rules for sniper. After you've played around with that, you're going to turn that sniper set, that sniper activity. Here's the conditions under which I will use a sniper. It might be, hey, if I've had 5 bars, and I'm just going to say as a point of maybe 5 bars, hasn't lost. One, two, three, plus 1, 2, 3 pattern. Not yet. No lose plus dinner for 2. In other words, the standard work, whichever one I picked, has not yet gotten me to no lose plus dinner for 2. So that means my stop was either back here on the Wu Wei because it hasn't moved up yet, or the PSAR, if I'm using that, hasn't gotten me to no lose plus dinner for 2 yet. This whole package is just one way that a brown belt might have developed a set of personalized rules for how to snipe, put that into pseudocode with very clear instructions. Now, how do you know those are clear? Test on friends or accountability partners. And you say, hey, my friends, this is the language that I have used to describe my standard work for sniping. Does that make sense to you? And they'll see, well, they'll give you feedback on it. Say, yeah, what about this? What about that? So you test it with your partners. Then when you've got that locked in, you have just created your set of sniper rules for what to do in a period of non-standard work, or what we'll call abnormal conditions. Now, if the PSAR or the Wu Wei is going to work for you 80% of the time, and that's normal standard work, then 20% of the time, 1 in 5, you're going to have some event occurring here like this, where either the PSAR stop or the Wu Wei stop has not yet gotten you above that critical entry point. And some amount of price conditions. It might be a 1, 2, 3. It might be anything else. How many variables are there that make you question whether this trade is going to work or not? Infinite. And so 20% of the time, you're using your intuitive judgment. So here's what I will say. If I don't know what to do, like I don't have a rule for it, get out. If you don't know what to do, you know what to do. Get out. That's my sniper override right now. Just get out. I'd rather be on the outside of the trade, wishing I was in, than on the inside of that trade, wishing I was out. I know how to re-enter. It was a low and a higher low, and it crossed, so I'll just get back in. I know how to re-enter. So there's your first sniper rule. I felt like I didn't know what to do, and all I knew was I was not satisfied with whatever standard work I was choosing, then just get out. Then document that, and then that goes into your learning journal, and you're making your entries and how I felt and why I decided to override and all that. You shouldn't do that until you've gone through the PSAR. You should be doing this with paper trading and forward testing and prototype level testing on one share until you've got 50 real trades in hand, tested both ways, and then come up with what you think are a reasonable set of articulated rules that will go into your sniper pattern to cover the 20% of the time when your standard work isn't good enough. Do this work. This is what that work might end up looking like as a hint that your brown belt rule set which you have tested on your accountability partners if you're smart, and they've given you feedback because they're doing the same thing. And in between the three of you in your accountability group, you're coming up with a set of workable rules, which then can be pseudo-coded. Then guess what happens? When you can get your sniper rules, now suddenly it's no longer abnormal conditions. You now have three definitions of standard work. And you've just transitioned to any one of those three. And now your sniper has a set of call forward rules that said, my manager is working it under normal conditions. But if I see that pattern, I know that I just call the sniper and he knows exactly what to do. That becomes standard work for your manager. That's what you're doing at the brown belt level. So I wanted to say all of that in order to just simply say the following. The Wu Wei and the PSAR are your friend inside this transitional state. You've done all your thinking over here prior to the entry. Unless you know exactly what you're going to do and when to activate the sniper or not, you are not ready to trade. You're not ready to trade unless you've done all of this conceptual work and rehearsals before the moment of entry. This is hard work. You know what makes it hard or harder? Is to defer that, make some stupid decision to enter, and then try to catch up and say, while I'm under the pressure of all this stuff, I'm going to now try to resolve what my actual plan for exit is. That's what makes it hard. So don't do that. Like, go listen to the Bob Newhart psychotherapy. He says, stop it. Don't do that. Do all your thinking over here. Then you're ready to trade. If you've done that work, you're ready to trade. If you haven't done this work, you're not ready to trade. If you trade when you're not ready to trade, don't even listen to me. Because anything I'm going to say cannot overcome that chimpanzee. So that's your challenge. Manage the chimp. Use the owl wisdom to manage the chimp. So that's my guidance to you. So listen how simple this sounds when I just write words. Here's how I manage the exits of losing trade. It just hits the working exit. I get out, end of management. I'm in the zero state all the way through there. Zero state. Hey, Ken, you made the statement, it's okay to be wrong, but not for too long. Could you elaborate on what is too long? Yeah, if you stayed longer than the working exit, you stayed too long. Never lower your stop. Pick an exit that disproves the hypothesis of the trade that you've taken. You stated never take a loss bigger than 1 XR. Yeah, the position sizing R is 0.2. Or I'm sorry, the execution R is 0.2 of the position sizing R. I'm never going to take a position sizing R loss greater than 1 on a day trade. It could happen on a swing trade. It really could because of gaps. So, okay, I'm going to try not to. That's why I like to have that swing trade paid for with markets money. I feel like the excess loss is coming out of trading money. If my win rate is 60% and my average win is 0.6, it's not 0.6 XR, it's 0.6 position sizing R. Yeah, if it was 0.6 XR and the average loss was 1 XR, then that's not positive expectation. But as I explained here, the average win is 0.6 position sizing R. My average loss is 0.3 position sizing R. What rules or methods do I recommend for minimizing the losses to less than 1 XR? Standard trade framing, and I just walked you through how you're going to take less than 0.1 R. So if you're using the trailing PSAR, you're going to take less than one execution hour because of the rules. And on average, you'll take less than one execution hour if you're using the Wu Wei, because at some point, enough of those are going to get up to no lose plus dinner for two that your average loss will be less than one execution hour, which is less than 0.2 position sizing hour. So all the anxiety that you feel with those open trades is unreal. Well, it's real because you feel it, but it's not connected to a business plan which looks at statistics and histograms. So that's what a novice of this style of thinking feels like. That's what it feels like until you've internalized these things. That's one of the edges. This is a lot of hard work, but the payoff is that you can take the heat when other people can't. So if I enter a trade with the SSC and immediately get 3 candles down, do I exit? If it's the Wu Wei exit, no. If it's the PSAR exit, maybe. If I'm using the sniper exit, maybe. But I'm going to tell you, use the Wu Wei exit and learn how to take the heat on that trivial risk that we're taking. It's at a critical state. The Wu Wei exit is a trivial loss in the great big scheme of things. So just take the heat. But what if take the heat. If after 50 times you can't take that heat, you may not be a trader. That's okay. The world doesn't need everybody to be traders. You can take that heat. You just get accustomed to it, like anything, like the frog in the water. You just get used to the heat. Get used to it. Develop that thick skin. So I just talked you through how to study the Wu Wei exit and the PSAR exit, and then it's a personal preference based on your experience and your trading platform and your chosen target and your time frame. But be absolutely clear. Make a choice, stick to it for 50 trades, then assess your feelings and results, and then make a professional decision. Then add the sniper. I feel like I owe you one more little piece of insight here. Man, I really liked that speech. That was cool. I said that sometimes I trade something other than the SSC. Yeah, I trade other patterns on the daily trade, like huge gap down outside of the Z3 and a 1-2-3 re-entry. Yeah, do it all the time. Or it moves a hybrid frog box off the low. So there was yesterday's Z3 pinch box and all that jazz. Especially, Bollinger Band mean. And then the next day, and maybe the VWAP was in here, something like this. And now suddenly there's some big gap down and it sells off. So maybe I have that kind of action going on, and then this, you'll see that VWAP comes all the way down here, and it starts maybe rolling up. Yesterday's VWAP, here was the close, and here was the open. So now this from the close now, if I've done my homework, I know what frog box is. I know what the hybrid frog box is. It's either by default 0.7 of a frog box, and I've taken the hybrid trading course, and I know what my minimum manageable risk box is. So if I've got some MMRB off the bottom, so I can manage that, and the size of this gap got my attention, and it's got a 1, 2, 3 entry, I can just trade it. You know what hasn't built in yet? All of the statistics-based factors of the RL10 and all that other stuff because of the size of the gap. But this sure feels like, conceptually, that feels like a big red candle. So there's my harsh winter. There was an overreaction. There was a working low of the day. So I'm going to go long on this 1, 2, 3 exit, and I'm going to aim for a return to the gap, or a return to the VWAP, or to break out of that Z3 and beyond. And I'm going to know what 50% retracement is. And I bet you I know if that's the size of this, and I can see 1, 2, 3, I bet you that if this thing gets up anywhere in here and then starts to roll over, I bet you I'm going to put a sniper exit right in there and get paid. I bet you I'm going to do that. That's what a sniper sounds like. A sniper says, I bet you that I can not lose money if you give me an MMRB off the bottom, or a hybrid frog, or a full frog box. If I let that thing go more than a full frog box, remember the frog box 1.0 is a signal. That is the first signal. All of this other stuff is noise. Now, I can trade in the noise with managed risk because I'm a sniper. And how do you get to the minimum manageable risk box? You take the hybrid trading course and you listen to that lesson that talks about how to march your way down here. I've given you a preview of coming distractions and says, just look back at the previous day's trading range and find that the tightest little pinch when it was sideways quiet channel, that's what it looks like when it's idling, when it's just mucking around in here and nobody has any directional interest whatsoever. You put that size of a box and just call that my MMRB, and then see where that compares to the hybrid frog box or the frog box, or just use a quarter of an ATR. Because that's an adaptive noise, an adaptive measure of noise. If the frog box still feels clumsy, just take a quarter of an ATR. Why? Because an ATR is a normal move. And if I've given it, a quarter of an ATR move off the bottom and it's starting to go up, and I've given it 1/4 of an ATR, and I'm aiming, if it just gives me an ATR move, there's my 3-to-1. And now if it only goes up, this far and starts to roll over, take it. Sniper, especially in this opening shenanigans. And then under those conditions, if it just gets back to the previous VWAP, you were trading in the yellow zone, and now this thing is really getting ready to go. You know what to do. You know where the mechanical entry is, which justifies on a swing trade basis getting in. So all I'm doing is describing how to trade in the yellow zone, and you're front running the mechanical entry. You do that if you're a day trader. And if you're a day trader, you've got some sniper skills, and you've gone through the planning and preparation to refine how much room you have to give it. And then you start with big, fat, slow-moving indexes like DIA, because that's not crazy. That is the 30 largest companies in the world connected to 30 real things. 30 real things that are in there feeding DIA, the symbol. That has plenty of volatility for you to get a really small MMRB, and then you can practice that, and then you can work micro and mini futures, or you can trade those triple leveraged UDOW and SDOW, and that's how you start developing skills on the indexes with MMRBs and how to get to the MMRB, starting with an understanding of the frog box. So this is not the SSC. What I really want to see is normal work, normal conditions. So this thing opens close to where it exited, to where it closed the day before. It came into here. It just moved into here. It didn't have a big gap, and and then it gives me a nice big long harsh winter. The harsh winter crosses over the baby dragon. The winter becomes the spring. It crosses that big fat dragon. I get my stupid little entry here. I draw my risk box down to the PSAR. I just manage the PSAR exit. Or I take the Wu Wei exit strategy and then move it up when it eclipses my entry by 3 dots. 1, 2, 3. On the fourth one, move the PSAR up, move the stop up here, keep that in place until the Bollinger Band mean comes in, and then follow that. So this is what we do on normal work. All of this stuff over in here is abnormal work. You're ready for that when you can do MMRB and sniper. Until then, just frickin' wait. Just wait until you see the pattern that you decided to trade. Just wait. There's plenty of opportunities to see how far down it got and then what the low of the day is and all that. SSC, sniper. Take the hybrid trading course or the day trading course if you want to screw around with that. If you just want to learn how to get going, just do the sniper or the SSC kata. And then what you're doing is SSC. When you master that, go to SFC, SWC, And that's now you're thinking like an owl. And in the hybrid trading course, I've given you the flashcard that tells you the sequence of how to do that. Start with Brazil and DIA to get two reliable frog champions, one that is very aggressive, one that is calm and relaxed. And then you'll have enough experience with a range of target behavior to learn a good pattern, then start build on those patterns. And now you have chain trading in the way that an owl would do that. When you've done this, you can come back and start swirling around with that. First things first. So, Dave, there's your 15 to 20 minute discussion in 90 minutes. All right, that's everything I got for today. Let me see real quick if there are any other questions. There you go, Dave. I am now a friend. Okay. There's Bob Work saying the simultaneous sip with Doc Long, what could make Saturday better? So if you don't listen to Scott Adams' daily podcast, you're missing comedy gold. Plus, he's a pretty good critical thinker. About half the stuff he says is full of crap, but compared to the 100% stuff you hear on the media, that's a pretty good hit rate. And it's good critical thinking to look at his sloppy thinking in order to find the seed of really good stuff. This one was pretty good, I think. So thank you for asking a very good clarifying question, and I appreciate all your patience and the impressionistic paintings. I'm going to get that rendered into a really nice 5x8 card with those beautiful Frixion pens from Pilot with the erasable ink. And then I'm going to just remember that monkey and owl. Here he is. You know, the initial, I think the initial price of those is $100 for the first 20. And after that, it's going up to $250. But if you want one of the first 20, you can have them for $100. And that's all going to the soccer club anyway, so, whatever. He's got a bunch of other prototypes that he's done that are just so doggone amazing that I think I'm just going to ask Dave to put together a little catalog, or maybe I'll put the catalog together. My daughter is doing a really nice bit of work with graphic design, logos, and labels, and she wants to set up her own little business to do stickers and labels and other stuff like that. She's done all the design work for our t-shirts for the club and all that, and she just really enjoys that. She's been bugging me to get a 3D printer too, so maybe that's in the works. So I'm going to have her put her design thinking and work with Dave, and we'll come up with some kind of catalog for merch. But I've got 20 of these things in hand, and they are just beautiful to hold. And I have one on my desk as just a living reminder of what the inside of my head feels like all the time. All the time. That's how you know you're alive, is that there's this eternal struggle. Oh, yeah, Bob, that's a very good idea. I will, I'll sign them all on the back. How about that? James asked me, not sure what period The painting was from there. It was from the scrambled egg period, the period of internal strife. In Chinese history, it would be the Warring States period, the war between owl and chimp. And when you read Confucius, yeah, I'll number him too, Bob. That's a good idea. You got number 2 coming to you, by the way. I just need you to send me your mailing address. Yeah, so in Chinese history, the Warring States period is what motivated Confucius to write his rules for orderly society, the longest enduring social philosophy, political philosophy there is, and he wasn't all bad. So that's everything I got. We're getting ready to load up the car. They're staring at me right now saying, when are you going to come lift these heavy things? I was hoping that I could defer that to them, but they're waiting for me to do the heavy stuff. My weightlifting program is coming along well. Bob, I've worked my way up to 100 pounds now on the military press, 4 sets of 10, Monday, Wednesday, Friday, and then 50 pounds on the curl and the tricep pull-ups. So I started with a 20-pound exercise bar, doing military presses, clean and jerk, curls, and tricep extensions, until I could do 50 in one set without stopping. And then I moved up to 30 pounds, and then in 40 pounds and 50 pounds, and then I've been going up every week 5 pounds on the military press. And there you go. Yeah, if you listen to Akira the Don and that Jocko podcast that he's done, I played the 6-minute version of saying good to my soccer team, and now they're already disgusted with it. They just good. They know what I'm going to say, and I just say that's good. So he's done a really nice job on that, and the soundtrack is just beautifully rendered. So take good care, guys. We will see you in the chat room. Ting, thank you for being there, and wish you all the best.